of Mortgage Master. Leif, good to see you. Thanks for being here.
Thanks for having me.
So are we starting to see those bottoming signs that perhaps the worst might be over in existing home sales?
I think so. We also have to remember that the existing home sale numbers are from contracts signed earlier in the year, typically 45, maybe 60 days earlier. So I'm willing to take a bet that the next couple of reports are going to look a lot better. There's a lot of activity out there. We're hearing it from our own salespeople and from the realtors that there's a ton of activity out there.
And about 50%
the tax credit is helping.
Right, and I understand that a combination of about 50% of them have been foreclosure related, or what you call short sales, which is probably good news to get some of that inventory off of the market. But as you were about to mention, there have also been some great tax incentives for first-time home buyers.
Yeah, no, we definitely need to clear the inventory of distressed properties from the bank's balance sheet. That's a must. But there's another good thing here, like all the people who have to sell now, not the distressed properties, will get an even bigger discount on the home that they buy when they buy up. Let's say they lost maybe $50,000 on their current home. The home that they're looking at in the next price range is probably down $125,000. So it's a good time to buy in all the price ranges.
So in other words, don't be gun shy on the sale, because this could be the buying opportunity of a lifetime?
Absolutely, yeah. The affordability index is the lowest I think it's ever been. The combination of the interest rates, people's income, and the home prices. It's people who buy right around now, 5, 8, 7, 10 years from now is going to look back and say that was a great deal.
What are you seeing?
There's no question about that.
What are you seeing in terms of mortgage activity? For example, we've been talking a lot about Ken Lewis today at Bank of America. He said to me on a recent interview they were doing $5 to $6 billion of daily mortgage refi activity, about 2 times the normal rate. Can't keep up with all the phone calls. Are you seeing and hearing the same kind of things?
Absolutely, yeah. We're not as big as Bank of America just yet, but we're doing 50 to 75, sometimes 100 million a day, which is a lot for us. And it's obviously primarily refinances. I think it's about 81% refinances right now. So the numbers are big. And I actually think that rates are going to stay low for a while. So we're going to have a good mortgage environment for all of us for the foreseeable future.
Yeah, I mean, that is the one thing I think we can give some credit here to the Fed in terms of keeping interest rates really low and allowing for institutions to make some good money off of this. I think the most recent data showed that the interest rate on a 30-year mortgage, according to Freddie Mac, was 5%. That's pretty incredible.
Yeah, I think we're out there in the high 4s with no points on a 30-year fixed, again, depending on loan amount and FICO score and loan to value. But yeah, the rates are fantastic, absolutely. And we got to make sure everybody gets out there and takes advantage of it. It doesn't just help the companies doing the mortgages; it helps the consumers. I did some back of the envelope math driving over here, and I think it's freeing up something like $3-4 billion a month to the American consumer. They can go and spend on various things.
That's terrific. That is a combination of the stimulus attributable to oil and gasoline prices. The two combined could really help the economy. Leif, thanks so much for taking the time. Good seeing you this morning, or this afternoon. I'm sorry.
Likewise.
I've been up for
That's okay.
too long.
Thank you.
Okay. All right, now let's get to your emails.